Hi folks, this is Sean Hyman coming to you from Chart of the Day from lovely Los Cabos, Mexico, where it seems inflation's never been higher. I think they ought to call this place the home of the $50 cheeseburger. But anyway, let me get to the chart of the day, and that's Euro Yen, and I want to talk to you about how it stalls as stocks tend to lose their steam. And to show you what I mean by that, I want to show you a chart here of the NASDAQ in the U.S. And you could pop a trend line right through here where I'm drawing the cursor, and you would have it break a trend line about 2150. Then it goes further to break down below a 50-period simple moving average, another technical breakdown. Another thing that concerns me about the U.S. stock market is you'll notice that the RSI has actually been making lower highs for months now. You go to the MACD, it's been making lower highs and is threatening to go below the zero line for the first time in months. These are all bearish implications. It does not mean necessarily that the top is in place today or tomorrow or something like that, but these are all warning signs that should be taken as very seriously. And so, this huge run up in stocks has been without any sizable retracement, and it's almost been straight up since March, and I'm expecting a huge correction coming due to eroding technicals, and also due to the fundamentals really that had improved were largely the result of the government propping up the improved economic numbers through TARP, cash for clunkers, things of this sort, all these government programs. But we've still got the same problems that we've always had ever since this credit crunch happened. We still don't have banks lending. They're still tight-fisted there. They're still saving. They're still hoarding those reserves. And when they're and while they're in that mode, stocks are not going to prosper. The reason why that is because you've got to get to where you've got a consumer-led economy, and right now we don't have that. Right now we've got a government-led economy. And as soon as the smoke and mirrors wears off from the government programs, it goes back to the consumer. The consumer cannot pick up the baton because the American consumer, one, does not have any savings, and two, they would have to lend and borrow. They're not going to be able to lend and borrow because a high percentage of them have either lost their jobs or have gotten cutbacks, laid off temporarily, things of this sort, wrecking their credit. But even the people that have pristine credit are getting rejected right now from the banks because the banks are not in lending mode. If you'll notice, all your bank commercials right now pretty much are savings programs, ways to save, ways to bring in money to their banks, not lending programs and loans and ways for money to go out through lending and loans. And so when you have credit still seized up like that, you've got a problem that's just been masked simply, and a problem that has just been prolonged and delayed. And so this looks like a bull market rally, but bull market rallies tend to not V, as we see in back here in March. Bear market rallies tend to actually rally higher up and quicker than newly formed bull market rallies, but then they fall very hard. And that's one reason why I have a lot of caution here, because I really think this likely could be a bear market rally in stocks rather than a new full-fledged bull market, because bull markets normally build a base for a while and start slowly moving up and out. So the way this pours over into Euro Yen, a lot of stock traders watch as almost like a proxy for risk temperament in all markets. And when traders are riskier and willing to go out further on the end of the limb, they're buying up euro versus the yen. The yen is one of your most risk-adverse pairs out there. When stocks cave and times get bad and the fear level goes up and the volatility index goes up, the VIX, the yen tends to prosper. And so right now we had seen risk seekers in control, and it had driven Euro Yen up just astronomically here. Lately, in the most recent months, we've seen this level out, meaning that the risk seekers are backing off because the defensive people out there, those that are getting long the yen, are fighting against this thing and gotten it in a sideways range. We've hit resistance several different times here, 1, 2, 3. And so there's a huge possibility that this thing could fall through eventually through this green support level. And for those of you that are in my currency cross service, we're going to be watching this currency cross very closely. We're going to be watching stocks for them to crumble. When they do, we're going to get on a short here on Euro Yen, and in the service I give you exact entries, stops, and exit points. So there's nothing left to the imagination, and that way these guys that are in the global currency cross service, they're going to be able to hedge the losses that they take in their stock portfolios by the gains in their currency portfolios. And so that's what I wanted to talk to you about in the chart of the day, is the effect that Euro Yen has upon stocks and stocks have upon Euro Yen. Look for weakness coming in Euro Yen and in stocks to come. This is probably weeks or months away minimally, and could come even sooner. I mean, we could see this within days even, but the charts will tell us when it is, when it's coming, and we'll see certain technical levels breached, and we'll know we're underway then. Thanks so much for watching.